What do you think is the key to becoming successful in the world of investing? Warm greetings, dear listeners. Today we're embarking on a journey into the mind of one of the most successful investors in the world, a man whose name is synonymous with success in the stock market, Warren Buffett. His story, his methods, his philosophy, they all weave together to form a tapestry of unparalleled financial acumen. But what lies at the heart of his success? Is it an intricate understanding of the markets, or perhaps a superhuman ability to predict trends? Maybe it's an insatiable appetite for risk. As we delve deeper into his life and his strategies, we'll find that the answer is much simpler and yet profoundly impactful. So are you intrigued, ready to uncover the secrets of the Oracle of Omaha? Well, the answer may surprise you. Let's dive into the world of Warren Buffett. You may have heard the name Warren Buffett, but what do you really know about this titan of investing? Warren Edward Buffett, born in the heartland of Omaha, Nebraska in 1930, is considered one of the most successful investors in the world. He is the chairman and CEO of Berkshire Hathaway, a multinational conglomerate holding company, and is known for his frugality despite his immense wealth. Buffett started his journey in the world of finance at a young age, buying his first stock at just 11 years old. With his brilliant and strategic mind, he has built an investment empire worth billions. He's often referred to as the Oracle of Omaha for his uncanny ability to predict and profit from market trends. Famed for his sage advice, Buffett is not just an investor, he's a mentor, a philanthropist, and a beacon of hope for anyone who dreams of achieving financial success. So what exactly are these investment rules that have made Warren Buffett so successful? Warren Buffett's first rule of investing is simple: invest in what you know. This is not a call to invest in what you're familiar with superficially, but a directive to delve into the intricacies of a business, to understand its mechanics, its industry, its competition, and its potential. It's a call to knowledge, to comprehension, and ultimately, to confidence. Let's take a trip down memory lane to illustrate this point. In the early 90s, a new industry was emerging: technology. Tech companies were sprouting like mushrooms after the rain, and investors were clamoring to get a piece of the action. However, one prominent figure was conspicuously absent from this frenzy: Warren Buffett. Why, you ask? Simply put, he didn't understand the technology industry and therefore chose not to invest in it. Then came the dot-com crash at the turn of the millennium, where many of these tech companies, once seen as the future of the industry, crumbled into obscurity. Buffett's decision, initially seen as out of touch, was now recognized as prudent and insightful. He had stuck to his rule, investing in what he knew, and it had served him well. Fast forward to 2011, when Buffett made a significant investment in IBM, a tech company. What had changed? Buffett had spent the intervening years learning about the tech industry, gaining a level of understanding that he was comfortable with. Now, he was ready to invest in what he knew. This rule is not about limiting your investment opportunities, but about ensuring that you're not gambling with your hard-earned capital. It's about making informed decisions based on knowledge and understanding rather than speculation and conjecture. And remember, this rule isn't exclusive to investing. It's applicable to any area of life where decisions need to be made. Whether it's choosing a career, buying a car, or even ordering a meal at a new restaurant, investing in what you know can lead to better, more satisfying outcomes. But of course, investing in what you know is just the first step. Buffett's second rule may seem counterintuitive. Don't be afraid to say no. You see, in the world of investing, opportunities are like buses. There's always another one coming, but not every bus is going to your desired destination. The financial markets are teeming with potential investments vying for your attention and your capital. But Warren Buffett, the Oracle of Omaha, urges us to approach these with a discerning eye. He advises us to be selective, to scrutinize each opportunity and evaluate it against our own knowledge, our own understanding, and our own investment goals. Buffett himself is known for his selective approach. He doesn't just jump on the latest trend or the hottest stock. Instead, he opts for businesses that he understands and trusts, ones that align with his long-term investment philosophy. His selective strategy has certainly paid off in the long run, making him one of the world's most successful investors. But why is saying no so important? Well, it's because investing is not just about making money. It's about preserving your capital, managing your risk, and growing your wealth steadily over time. When we say yes to every opportunity that comes our way, we expose ourselves to unnecessary risk. We stretch our resources thin and dilute our portfolio. And more importantly, when we're always saying yes, we may miss the truly great opportunities that align perfectly with our investment goals. We may overlook the investments that could provide significant returns over the long term. So the next time you're faced with an investment opportunity, don't be afraid to say no. Take the time to evaluate it thoroughly. If it doesn't align with your knowledge, your understanding, or your goals, then it's not the right investment for you. And remember, there's always another bus coming. This rule, like many of Buffett's teachings, is simple yet profound. It reminds us that investing is not a game of chance, but a game of skill and strategy. It encourages us to be patient, to be selective, and to make informed decisions. With this rule, Buffett reminds us that patience is indeed a virtue in investing. Buffett's third rule is perhaps the most important: stick to a long-term perspective. There's something about our human nature that makes us crave instant gratification. We want results, and we want them now. But in the world of investing, patience is not just a virtue, it is a necessity. This is the essence of Warren Buffett's third rule: adopting a long-term perspective. Buffett's strategy is built on the foundation of long-term value investing. He is not swayed by the daily fluctuations of the stock market. Instead, he focuses on the intrinsic value of a company and its potential for growth over many years, even decades. Take the case of the Coca-Cola Company. Buffett first bought shares in the beverage giant back in the late 1980s. At the time, many questioned his decision. The company had seen better days and its stock was not the hot ticket item on Wall Street. But Buffett saw something others didn't. He saw a company with a strong brand and a product that people around the world loved. He saw potential. And so, he held on to his shares, even when the market wavered, even when critics questioned his judgment. Today, his original investment has grown exponentially, proving that patience can indeed be profitable. But let's be clear. Long-term investing is not about blindly holding on to stocks and hoping for the best. It requires constant analysis, a keen understanding of market trends, and an unshakable belief in the companies you invest in. It's also about understanding that the road to wealth is often a marathon, not a sprint. It's about accepting that there will be bumps along the way, but knowing that with time, the market has a way of smoothing out these rough patches. In the end, Buffett's third rule is a testament to the power of patience and the importance of perspective. It's a reminder that in the world of investing, the tortoise often beats the hare. And there you have it, Warren Buffett's 3 simple rules for successful investing. So, are you ready to start investing like Warren Buffett? Let's take a moment to recap the 3 fundamental rules we've just unveiled. Firstly, the wisdom of investing in what you understand cannot be overstated. It's about making informed decisions based on your knowledge and experience. Secondly, the power of no. It's the ability to resist the temptation of dubious investments, no matter how tantalizing they may appear. Lastly, the importance of a long-term perspective. It's about resisting the urge to chase quick profits and instead laying the foundation for sustained success. These principles may seem simple, but their impact is profound. They have guided one of the most successful investors of our time, and they can guide you too. It's your turn now to apply these rules, to navigate the world of investing with wisdom and confidence. Remember, investing is a journey, not a destination. Subscribe for more content, and let's continue this journey together.